Hello, everyone. Welcome to today's live session at the newer time, the early time of 10 in the morning. So, as I mentioned on Monday, we're going to start doing these 3 days a week. Because we've got a bit on at the moment, but do them at 10 in the morning because I think hopefully they might prove a bit more useful at that sort of time rather than at lunchtime to give people a whole day to watch the levels and the sort of things we talk about. I'll just leave that risk warning up for a bit. I try and do different themes for these things. The theme on Monday was whether stock markets would hit fresh all-time highs. And we've definitely seen that. We saw that yesterday. The biggest movers so far this week have been stock markets. So we'll take a look at that. There could even be an opportunity in the DAX, the German index, a little bit later on today. So we'll take a look at that as well. Before we get into the markets, we've just got a couple of things to go through. We're doing a promotion at the moment. If you open an account, so if you don't have an account with us and you open an account, a real account, we're doing a 30-minute Skype session with me, David Jones, on trading strategies. So all you have to do, we've set up a page to manage all this, and the link is in the chat on the right of YouTube, and I'll put it at the bottom of the video description once it's recorded. So go to capital.com, David, open a real money trading account. Once it's done, we'll be in touch to arrange a convenient time for the call. And on the call, I'll go through things like trading strategies, markets to trade, risk management, that sort of stuff. Try and answer any questions that you have. So it's just to try and add a bit of value to new clients at Capital. So if you go to capital.com/David, we're doing that. So I'll put the link is there, and I'll put it at the bottom of the description as well. The other thing we're doing, we have finally got up the website, the web page for our Heathrow seminar. So we're doing this free-for-all seminar basically a week on Saturday at Heathrow. So it starts, whether you're a client or not a client, you can come along. It starts at 10:30 in the morning. And, we will clearly, my background is technical analysis. So we will look at technical analysis, but it's not a day just talking about what in theory works. I'm gonna talk about why so many people have problems. We do know the vast majority of people, struggle to make money when it comes to trading. So we'll spend a bit of time talking about that and what we can do to try and get around it. Then some simple but effective strategies, indicators. I'm not a big fan of indicators, as you might know, but which ones I think work and when we should use them. And in the afternoon, we'll spend quite a bit of time talking about managing risk, position sizing, all that sort of stuff, because I do think that is the killer for most people. It's not the fact they can't get the direction of the markets right. I think what does people in is they end up losing too much on trades that don't go right for them. So managing risk is really critical. So that's a week on Saturday. I've put the link in the chat on the right hand side. I'll put it at the bottom of the description when it goes up on YouTube, and that's open to clients, non-clients, free of charge, no catches, blah blah blah. There you go. So if you can click on that link after and register for that. Okay, that's all that stuff done. And of course, any questions about this or anything else, or if there's any problems, drop me an email. My email address is david.jones@capital.com, and on Twitter I'm at Jones the Markets. Right, that's the promo's done. Let's get into it. Let's get into what's going on in market. So we did see some really big moves yesterday. We'll come to US markets in a second, but I thought I'd start off with the DAX, as it's the market that's officially open now. I mean, clearly US markets trade 24 hours, but the DAX, the trading hours are open now. So we saw, let me just take this back. So the DAX, I put on Twitter yesterday, the DAX did move to fresh all-time highs for the year. So we poked up through 11,800 yesterday. The DAX is up 11% year to date. So continuing that recovery we've seen in stock markets. But if we look at yesterday, we just take this back, we did see quite a turnaround in the afternoon. So US markets had been strong as well. S&P moving out to fresh all-time highs. We'll come to that as well in a minute. But news started breaking. I think, was it about 4-ish yesterday, 5-ish maybe, that the US and China trade discussions, China was starting to push back against what the US wanted when it came to intellectual property. So we saw quite a turnaround for stock markets, and we'll see it more pronounced when we look at the Dow. I think the Dow dropped almost 200 points in pretty short order. So we'll take a look at that. But these markets are still bullish, leaving aside that brief bit of intraday volatility. If we go back to the daily chart on the DAX, the German market, if it's pushing to highs for the year, yesterday we saw it at its highest level since October. So that's 5-month highs for the DAX yesterday, pushing through these old highs. It's a market that is still, clearly strong and continues to gain ground. So in a market like this, any weakness has to be a buying opportunity. And that's why I thought maybe what's been going on this morning is interesting. We're going to have a look at the short term in a minute. But I suppose if you wanted to build a negative argument for the DAX up here, it went overbought on the RSI beginning of March. It's pushed higher yesterday, but we've got a lower high on the RSI. So this can be a suggestion that maybe the market is running out of steam. So this is bearish divergence. I've talked about this idea of divergence now and again in the past. So yeah, clearly it is a bit overbought up here, overstretched, but it's a market that keeps going up. But what I think are the interesting levels to watch for the rest of the day, well, actually maybe the rest of the morning, the lows from earlier in the week. Okay, so if we pick up on these lows, so what's the date today? The 20th. If we go back to Monday, so this was Monday's trading session in this block here. So on Monday, the market traded as low as 11,636. Let's call it 11,630 with the Monday lows. Today, the DAX has been as low as 11,655. So we've come within 20 points of Monday's low, after trading as high as above 11,800 yesterday. So, if we were looking for an obvious place to buy into this uptrend, and this uptrend on the short-term chart here, the hourly chart, has been going for more than a week now, down here is really interesting. We saw the market push out to highs yesterday. No market moves in a straight line. We've seen a bit of a sell-off. Looking at the shorter-term RSI down here, you can see it's dipped towards the oversold. Not quite oversold, getting pretty near. So for me, to put it into a nutshell, if the DAX is going to bounce from anywhere on this short-term chart, we're here. So for me, this whole zone, let's say from 11.6 to 11.630, the market's currently 11.665. It's going to be really interesting to see if we see the strength coming in from here. I wonder if what's affecting it today, I think we've had what is in effect a profit warning from BMW today. So I wonder if we have seen in sort of early doors in Germany some pressure on German stocks because of that, a bit of a knee-jerk reaction because of that German profit warning, BMW profit warning, saying profits are going to be, I think, about 10% lower than the market was expecting. So I think the DAX is going to be a really interesting one down at these levels, okay, because we've seen lots of support from 11,600 up to pretty much where we are now. So I think that's a market to watch in the next few hours. Today is a bit of an odd day anyway, because this evening we have the latest US interest rate decision, 6 o'clock in the evening UK time. No changes expected, but as ever, markets will be looking for some sort of indication from the US central bank as to how they see interest rates going for the rest of the year. So I think we could end up having a quieter afternoon until that 6 o'clock announcement is out of the way. But there's the DAX, interesting market. I think that is maybe the most interesting market to watch this morning. So that's why I thought we'd have a look at it first. Let's have a quick look at BMW while I'm talking about that. I did have a quick look at their shares before I came on. BMW. So they're down. You can see they're down just under 5% on the day so far. And of course, you can short sell with us. So if you thought they were going to go further, you can short sell as well as buy. But I thought what was interesting was the trend for BMW over the past 12 months. We had strong markets last year, but the BMW price was 96 euros a share in January 2018 and traded as low as 68 in February. We had seen that rally, and there's that move on the dailies. I suppose what's interesting down here, if you thought that downtrend had been showing signs of running out of steam. Maybe it was time for a recovery. I think what's going to be interesting, we did see the BMW share price December and Feb hold above, let's say 68 to 69. So I think it's going to be interesting to see where it closes today. What does it do tomorrow? And do we see something of a recovery? Because the logical place to have your stop would be the other side of the February lows. So it has been under pressure for a year. Arguably, that downtrend has slackened off this year since January, hit by the profit warning this morning, but hasn't. It's okay. It's off 5%. It's not a massive amount considering they're saying profits are going to be 10% lower for the year. So for those of you interested in stocks, maybe that's an interesting one to watch, BMW. But we had seen something of a base building around 68 to 69. Right, let's get back into it with we'll look at the S&P, then we'll look at the Dow for yesterday. So we had just really right from the start yesterday, these markets in the US push high. Let me show you. Let's just take it back to the really short-term chart for yesterday. So they've been gaining overnight anyway. There's the move to not all-time highs for 2019. So about 4 o'clock yesterday. And then we had this trade war, US trade war, China talks, problems with the Chinese pushing back. And we have seen the market did try to rally and then has sold off a bit more overnight, but is showing signs of recovery. But again, I think what is interesting here, and I always bang on about these big levels, and we'll talk more about this in this Heathrow seminar that we're doing. Even though we saw quite the turnaround yesterday, the low we've seen overnight on the S&P is about 28.23, and that is pretty much the lows for the week so far. Okay, 3 o'clock in the afternoon on Monday, the S&P slipped down to 28.23. Then we saw the market ramp up to 28.54 yesterday. It's come under pressure, but it has stopped ahead of Monday's lows. Yeah, so even though we saw a big turnaround, we haven't seen new lows for the week set overnight. So again, for me, that looks pretty bullish. Yeah, the market got hit heavily, but the buyers come back in. So going into this afternoon, I think it's currently trading at 28.34. I think the first immediate level to watch, these overnight lows, which are also the Monday lows, 28.23. So for me, if we saw it under pressure when the market opened at 1:30 this afternoon, the official open, let's see what happens if it slips back down to the mid 28.20s. Okay, so I still think, when we've seen it all this year, there is still, there we go, look at that. I mean, that's incredible. That's the year so far. We don't see corrections last very long. There still appears to be the appetite to be a buyer on dips, and 28.23 is the first level to watch. Then we've got a big level back here at 2800 from March the 14th. Let's take a look at the Dow, and again have a look at that turnaround yesterday on those trade talks. So there's the move on the Dow. So again, it was about 4 o'clock yesterday. Dow had touched 26,100. And then pretty quickly was down within less than an hour, had lost a couple of hundred points and was trading at 25,900. Like the S&P, slipped a bit lower overnight, traded as low as 25.8. 25.8 again is the lows for the week so far. So 25.775, 25.8, big level to watch for the Dow this afternoon. Currently trading at 25.890. So let's see what happens. On the dailies, it's interesting. I mean, the DAX and the S&P have pushed out to fresh highs for the year. What I thought was interesting was the Dow hasn't quite done it. So the Dow, again, is only 30 stocks. I mean, the DAX is only 30 stocks as well. The S&P is 500 stocks. But we are seeing the Dow still struggling with this whole, this 26,000 to 26,300 area. So not following through upwards the same way the S&P is. But saying all that, US stock markets, still positive, as our European markets, with that DAX move to highs for the year yesterday. But maybe we have a quiet afternoon until the US interest rate decision is out of the way. Okay, let's take a look at currencies. A very quick look at currencies because they're being boring. Of course, Brexit. I'm sure if you're in the UK, you've been following the news. So Theresa May is going to Europe and have a chat about maybe an extension. Whether that ends up being a 3-month extension. They were talking about a 3-month extension this morning. on the radio. Let's see what happens. But not surprisingly, with nobody having a Scoobies as to what is actually happening with Brexit at the moment, this is the daily chart for the pound, and you can see the last 5 days pretty much devoid of any volatility, pound US dollar. So very much just a waiting game to see what happens next. You know, for short-term traders, 132 is still underpinning any weakness. Had a little look below it a couple of days ago, down to 131.85. But 132, we're seeing buyers coming back in. A similar thing has happened in the last couple of hours or so. It has traded as low as 132.11, and it's bounced back a massive 18 points so far. So for me, there's just no trade really in pound US dollar. It's no, you know, that was the last week, the volatility we had last week, some great swings last week, but it's just pretty much died a death over the last week and trading between 132 and 133. Okay, so no real overall direction. Let's see what the rest of this week brings, and if there is a Brexit breakthrough. Euro, US dollar. Let's take a look at that one. Euro. And then I'll look at a market that you might want to watch tonight when this US interest rate thing comes out. So the euro is still, if we flip this over to a daily chart, is still just about nudging its way a little bit higher every day against the US dollar. I mean, it is like watching paint dry if you're sitting there watching it during the day. But this recovery is still just about going on. Pretty flat day today. If we flip this over to the hourlies, there we go. There's our recovery since the European rate decision a week last Thursday, when it slipped to below 112. So since then, the market's clawed back about 180 points. It's still going higher. We've got higher highs and higher lows. You know, I think the obvious short-term support is around about 113. We definitely have some hurdles coming up for the euro, you know, ahead of sort of 114, maybe just above it. And again, but for me, I still think it'll squeeze higher. I mean, clearly we've got that interest rate decision tonight in the US. So let's see what happens. But the euro, in the short term at least, doesn't really want to go down. So I think for me, any euro weakness still looks like a buying opportunity, and looking for sort of 112.90 to 113 to hold. But let's see what happens tonight. And just one more thing on tonight. We launched this new market a few weeks ago. It's a market that I think it's a really interesting market. It's the dollar index. It's the dollar basket. You know, it's widely traded out there in real markets, but it's the dollar against a bunch of other currencies. The largest weighting in the basket is the euro, which is about 57%, but it's against the pound, the Swiss franc, Japanese yen, blah, 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 all of that. So I think this is a market that you might want to watch tonight if you are sitting there with nothing else to do at 6 o'clock when the US interest rate decision comes out. So you see how the dollar reacts to it. So the dollar has had a great run since April last year. Okay, so we saw the dollar index go from below 90 to nearly to 98. So that's, you know, pretty much almost a 10% rally from those April levels. It's fallen back since then, but it hasn't formed a new downtrend. It did the other week try to break through those highs from last year, and it hasn't quite yet. So it's sort of hanging around in no man's land. But I think, you know, just to get a view on how markets react to the interest rate decision tonight, have a look at the dollar index if you're one of our clients, and see how that moves around. Okay, and what else are we going to look at? Gold and oil, isn't it? That's what we look at next. So let's take a look at gold, then we'll take a look at the oil price, then I'll deal with any questions that anyone's got. So gold, you know, the longer term, medium term picture is still pretty much the same. So we're still in that recovery off the August lows. We had the correction. The lows for the year held 1275 have been the lows for the year in gold, and it traded as low as 1280 during March. We're seeing the bounce back, a bit weaker so far today. But for me, again, the obvious target is a run back up towards 1345, 1350, and through there we'd be targeting the highs from late Jan of last year and the first couple of months of last year. So let's see what happens. So for me, any weakness in gold back towards these old lows around about 12.75, 12.80. Still looks like a buying opportunity. A little bit quiet day to day, but that recovery from August is still going. Oil is arguably an interesting one at the moment, even though we're not seeing much progress. So, as I've been saying, I think for a couple of weeks on oil, that recovery is still going. So that recovery from $43 a barrel ish in the middle of December is still going. And only yesterday, the oil price pushed to a new high for the year. So we saw it trade as high as 59.86 on our market yesterday. And I've been saying, if anywhere's going to be a problem, it's $60 a barrel, just because it's a psychological level, you know, all that sort of stuff. So if it was going to run out of steam anywhere, then 60 seems like a pretty good bet. Because what we're seeing is we're seeing the price, it manages to break out, but then it doesn't really go anywhere. It really struggles to have much momentum. But, you know, the fact it made new highs for the year yesterday shows the market is still positive. So I think 60 is really the crunch point for oil. I think if we see oil start trading through 60, you know, maybe for a couple of days and it holds there, you know, we don't just get a break through 60 for an hour, then it dumps back below and it starts looking like a false break. I think if it starts, you know, hanging around and breaking through 60, then I think we have to be much more aggressive in terms of targets, you know, with the obvious one, you know, maybe a move to 65, the lows from late October. So it's an interesting market, even though we're not seeing enormous amounts of day-to-day volatility. I mean, yesterday I don't think was a bad day, but it traded as high as 59.80 and down as low as 58.90. So we saw a dollar move in the oil price yesterday. It'll be interesting to see what happens over the next couple of hours. Do we see yesterday's lows hold? It's only about 10 cents above it at the moment. We do have big support at 58, relatively bigger support at 58. So arguably for me, the better trade is if it sells off from here down to 58 and stabilizes, do we get another push up to 60? So in terms of risk reward, that could arguably be the better trade. But $60, I think, is really the pivotal one for oil. But maybe today ends up being a bit quiet, waiting for the interest rate decision. Then of course it's Wednesday, isn't it? So this afternoon, we also have the US oil inventories. So every week, the US releases basically how much oil they've got stockpiled, and that can normally cause volatility for the oil price. I think that's due out 2:30 this afternoon. So watch oil this afternoon. So there we go. It could be something of an odd day today. Let's just flick back to the DAX, because I can see on another screen it's still weakening, the DAX. Let's just bring that up. There we go. It's still drifting a little bit, and I do think this 11.6 to 11.630 sort of area is one to watch. But at the moment, this is a 5-minute chart, and you can see it's still under pressure. But I think that's an interesting market to watch today, to see if it comes around. But like I say, the big event is the interest rate decision this evening. So you would normally expect volatility to start to drop off a little bit from maybe 3-4 o'clock this afternoon, waiting for that decision at 6 o'clock. There could well be volatility over the decision, affecting all sorts of markets, stock markets, FX, gold, and oil, and then back to more normal trading. But let's see what the rest of today brings. But I think for me, the DAX is maybe the most interesting one to watch, because we're edging back to the lows of the week. Okay, I'll answer the questions now. There's only one question in there, so that's nice and easy for me. Which indicators are best in the stock market from your opinion, or how do you pick a stock to buy? I think for me the most important thing is the trend in the market. You know, we talk a lot about trends on this sort of on these in these sessions. So if I pick up on a well-known stock, you know, such as Apple, I think the most important thing, if we're looking to trade stocks, depending on what sort of time frame you're looking to trade it, is you want to be trading with the trend. And there are times, you know, when it's easier than others. If we go back in time on Apple, and we go back to, we're going back a couple of years now, but March 2017. So we'd seen the Apple share price in 2015 really struggle with $135 a share, couldn't get past it. And then it breaks out. So it breaks out Feb 2017. So when we see a level break, you know, it can be a sign that maybe things are changing, and it starts this trend, you know. So for me, the most important thing, if we're looking to take a medium-term position on something, is to trade with the trends. And I think clearly we had trends that carry on for a while, and then things change. So that Apple trend after that break of 135, the Apple share price got as high as $230 a share. And of course, since then, we've seen something of a change, downtrend, but we've had an uptrend. And arguably, as of yesterday, the Apple share price was still in an uptrend. So for me, I would still be looking to buy the dips in something like Apple. So for me, I think the most important thing is the trend. Then look at secondary indicators like this one here, like the RSI. This divergence thing in late December, early January, did quite a good job of picking the turning point for Apple. The Apple share price slid to a low, slips a bit lower. RSI is making higher lows, again suggesting maybe the momentum's running out. So I would start with trends and then take it from there. So with BMW, for example, BMW is interesting because of the profit warning today. But maybe, if you thought, there are obviously a couple of ways of playing this. You could take the view, well, that trend off those highs since last year is still in place, and this reversal by the BMW share price today is the start of another move lower. So the way to trade that would be to sell short where it's trading now at 72 and have a stop probably above yesterday's high. Yeah. Or maybe the more aggressive strategy is, considering what BMW has done, the BMW share price has done this year, we want to be a buyer, and we're going to use this as an opportunity to try and get in a little bit lower down with stop losses below the lows for the year at 68. Okay, so I think it all starts with the trend, and then when you do the trade, you've got to think about the risk, because there's no point in risking $10 to make $5, because that's exactly why most people don't make money. And we'll talk about that in that Heathrow seminar. There was a broker. There's a really interesting bit of research. A broker did it back in, I think it was back in 2011. Looked at 4 million trades for clients over about 10 currency pairs, and actually, the clients were right on average more than 50% of the time. I think it was only 54% of the time, but 54% of their trades were correct in terms of direction. But where it completely falls down was when you looked at how much they made when they were right versus how much they lost when they were wrong. And typically, if they made $100 when they were right, they lost $180 or £180 when they were wrong. Yeah, so their losses were almost double what their profits were. So again, I think regardless of what market you're trading, you want to look for good risk reward opportunities. Yeah, when it comes to placing stops and stuff. But we'll talk more about that. For those of you coming to the Heathrow thing a week on Saturday, we'll talk a bit more about that. So I hope that's helped a little bit. Which are the most stable and volatile sectors at the moment? I don't know. I mean, the last week the pound has been stable because nothing's happened with Brexit. But you wouldn't say over the last 12 months that's been the most stable sector. I mean, we're seeing oil has been a bit stable, but again, you would expect volatility to increase. So I think it's difficult. If you're talking about stock sectors, I must admit I don't know because I haven't looked at individual stock sectors. But I think it depends. It depends on the time frame. I think stock markets. You have. Let's look at the VIX. I mean, we have our VIX, which is the measure of how volatile. It's a volatility measure for stock markets, and it's derived from S&P options volatility. But let's not worry about that. But you can see, so this was volatile. So the volatility, the VIX had a reading of 50 in February last year, and by September last year, it dropped to 12. Yeah. When markets were falling off a cliff in December, the VIX was at 36. And now it's at 14, 15. So you could say stock markets are clearly markedly less volatile than they were in the last quarter of last year, because basically they just go up every day is what we've had so far this year, which does lead you to tend to think, well, the volatility is going to come back at some point. But they've been, pretty low volatility this year. Can we have a look at sterling yen? Yep. We looked at that earlier this week, didn't we? And they were saying maybe it was running out of steam, or it wouldn't be a buyer up there. It's very important, of course, sterling yen in September when the Rugby World Cup happens, which is going to be won by Wales, to get and see what sort of conversion rate we get. But it has been drifting off over the last couple of days, isn't it? So we had this big move in, the theme for the. Let me take a step back. The pound has been the best major performing currency this year. We've seen strong recovery in the pound as expectations around Brexit have got a bit less panicky. So we'd seen sterling go from about 135 against the yen to as high as 148 in 10 weeks. So it's 10% move, 10% rally against the yen. But it's brought it back to a level that has been a massive problem. You know, we haven't seen sterling trade above 150 against the yen for almost a year. So it's been, you know, April last year when the pound was last above 150. So if you were going to be a seller of sterling against the yen, again, from a risk reward point of view, this looks like a good level. You know, it had a little go middle of March, and it just can't do it. So I think, you know, there's definitely a risk that we'll see the pound under pressure against the Japanese yen appear. Not much has changed since we looked at it a couple of days ago. It's drifted a little bit lower, but clearly 150 has been a massive ceiling for sterling against the yen. And I think for the pound, until we get something on Brexit, because we don't know what's going to happen next. You know, I think it's the EU summit tomorrow. There's a meeting, I think, next week. The European Juncker and Barnier are sticking their heels in and saying there's nothing to be done. You know, the UK Parliament is very split. So I think sterling's just boring until we get some sort of resolution. But we'll see. We'll see what happens. Okay, that's it. That's the last of the questions. So that's the first of our early morning, relatively early morning sessions done. We'll do it all again on Friday at 10 o'clock. So we have that crude oil inventories this afternoon, US interest rate decision tonight. No changes expected, but volatility is expected if they say stuff about the US economy. And maybe the DAX is an interesting market to watch because it is edging lower towards those lows for the week, sort of 11,600 to 11,630. So let's see what happens. But as I say, any questions, drop me an email. To open an account, use that link. I'll put the link in the comments below. We'll be doing this 30-minute Skype session talking about trading strategies. So I'll put that link in there. And there's our Heathrow seminar as well. So there's a lot going on. But we'll be back on Friday. But any questions in the meantime, drop me an email. Thanks very much.